Hey, Bowtie Nation, Joseph Hogue here, back with one of these news-related videos, just news that catches my attention. This week, uncovering news on Hims and Hers, ticker HIM, and Novo Nordisk could send these back up to their highs, along with one part of the market that could see another 158% return, the rare earths minerals that after MP Materials, ticker MP there. I'm going to show you how to find the next stock in that theme. Here we can see shares of Novo Nordisk, ticker NVO, already up today, pretty strong, 5% in the pre-market, already up on Wegovy being approved by the FDA for liver disease. Could be just the beginning, folks. So what I'm going to show you here could be just the beginning of a rebound back to last year's $140 per share. It would be 169% upside. Again, that move today, just off the FDA approval of Novo Nordisk, Wegovy being able to be prescribed for this MASH fatty liver disease. That is 6% of the adult population. It is another indication for this Wegovy, for this GLP-1 weight loss drug. Obviously already a blockbuster drug in that weight loss segment, but now being approved for treatment of other indications. That upside could be the long road back up to this $140 price per share that was at last year. Again, that is almost a 200% return from here. Shares of Novo Nordisk hit hard along with a lot of these other GLP-1 weight loss drugs from Eli Lilly. We'll look at that in a little bit. But here on Novo Nordisk being hit on two, really cutting guidance in its last earnings release on the boom in that weight loss drug segment. A lot of it from those compounding drugs. We're going to talk about that, why that's going to be the next catalyst to send this stock higher. But those weight loss drugs, those compound being sold as pretty much as generics to these GLP-1s. Here we see that did cause Novo to downgrade its expectations for full year 2025 sales growth down to 8 to 14%, down from a prior 13 to 21%. So a huge downgrade to the shares. And that was just recently here. We do see where it did cause the stock to fall from $72. It had clawed back some of its losses from earlier in the year, clawed back to $72 and plunged then again down to about $47. So a pretty big hit there on that downgrade in the outlook for sales for this year. A lot of that downgraded sales expectations was as a result of Novo Nordisk ending its relationship with Hims and Hers there in June, dropping the partnership with Hims and Hers, the platform selling that Wegovy as well as a lot of other drugs, ending that relationship over those copycat drugs, those compounds. We're going to talk about Hims and Hers here in a little bit. We're going to talk about those compounds and how they become the next catalyst for really both of these stocks. But sending the shares down 34% of Hims on that day on that announcement. Getting in the first of those two catalysts that I'm going to talk about that could send both of these shares higher. We want to talk about these compounds, and these are basically generics, okay? Generics from that semaglutide and the GLP-1 drugs from Novo Nordisk, from Eli Lilly with its Ozempic there. In the beginning, these drugs, the Wegovy and Ozempic, the patented drugs by these big drug makers, they were in very short supply. Okay, about 1 in 10 American adults are taking those GLP-1s, not just for the weight loss, but for a lot of the other indications, like we saw soon to be with that MASH fatty liver disease as well. A lot of people were taking these, and they just did not have the supply. Okay, these are a once-a-week injection. They are very difficult to manufacture because you have to have specialized manufacturing as well as refrigeration for those injectables. And so they were just in short supply. So the government approved very rare case of compounded generics to be available. Those generics took off. Obviously, anytime a company can come in, create a generic of a drug that's taken billions of dollars, tens of millions of dollars to create, and then create a generic off of it, not having to spend all that R&D costs and just create a generic right off the bat with this huge, overwhelming demand for it. You had a lot of compounding facilities coming into that. That supply crunch is now over, though. Okay, so the FDA ruled that semaglutide no longer in shortage in February 21st of 2024, almost more than a year ago now. That decision was later upheld by a federal judge, so it does look like the shortage is over of these GLP-1 drugs. Now, the FDA and a lot of the FTC hasn't really restricted these compounds. What happened is these compounding facilities, they were still pumping out full production. They were still putting that supply on Hims and Hers. They were still making that supply available across other platforms. But scrolling down now, we can see that the restrictions and prohibitions against these compounded generic ripoffs of these weight loss drugs are going to be getting stronger. We can see that the FDA ruled in April 22nd of this year that doctors could only prescribe these compounded generics of this in very strict, very certain occasions. If the compound was made specifically for the patient or, some other restrictions. So there are going to be restrictions on these compounds and they're going to start coming off of the market. In fact, here we do see in February that shares of Hims and Hers tumbled 26% when the FDA did say that shortage was over in those weight loss drugs. So Hims and Hers are very much benefiting from those compounded drugs, from those cheaper generic ripoffs of the GLP-1s from Eli Lilly, from Novo, which of course is why the Novo Nordisk terminated its relationship with Hims and Hers, why Hims and Hers wasn't so fast to kick off those compounded facilities, those compounded drugs from its site, and instead just said, okay, see you later to Novo Nordisk. And besides a weak earnings announcement, shares of Hims and Hers also coming under pressure from an FTC probe investigating the platform over its advertising and cancellation practices. So the platform making it very difficult for a patient to come in and cancel their prescriptions, cancel their subscriptions. So while I do like Hims and Hers, I think it's got some catalysts coming for an upside. I think you want to look at Novo Nordisk, maybe even Eli Lilly here first, and then we'll talk about where that catalyst for Hims and Hers is coming. And the first catalyst is coming in the form of just the pill for those weight loss drugs instead of an injection, instead of that once weekly injection. So right now, less than 1 out of 10 Americans are taking the GLP-1 drugs. Again, not only for weight loss, but also for some of these other indications, for diabetes, for that MASH liver, fatty liver disease, while 6 in 10 Americans are obese. Okay, so now because of the cost, the high cost of these, and just a weekly injection, nobody wants to stick themselves every week. Only 1 in 10 Americans are taking this when the potential market for this is huge, 6 out of 10. So, okay, you've got a potential 6-fold increase just on the obesity indication here. These pills that are being approved, in fact, Novo Nordisk has already been approved for its pill, but these pills are going to be less expensive, easier to swallow, pun intended, and also much cheaper to manufacture and distribute. Okay, they're not going to need the specialized manufacturing that you need with injectables. They're not going to need the refrigeration that you need with injectables. That's going to mean even at the lower cost, it's going to have the higher uptake, up to that 6 in 10 Americans, and then the lower cost going to be a profit bonanza for these stocks. Again, Novo already reporting that its application for that pill has already been accepted by the FDA. I misspoke earlier. It's not approved. It's already accepted that drug application based on its phase 3 randomized trials, creating the efficacy and safety of the drug over a 64-week trial period. If it is approved, and it is the first application that has been accepted by the FDA, if it is approved, it'll be the first pill form for these weight loss drugs out on the market. Eli Lilly has also put in its testing for the pill, as well as Pfizer, Viking Therapeutics, Structure Therapeutics. So there are competition coming for these pills. But again, just the uptake to that 6 in 10 people versus 1 in 10 now, the lower cost, the easier distribution, that is going to be a huge catalyst for these stocks. Second catalyst is just going to be that continued crackdown against these compounds, against these generics. And I know, it's nice to think that we could get cheaper versions of these drugs if you need to take them. But why do we have a patent system? Okay, why do we have a patent system protecting these drug makers that are going to spend tens of billions of dollars on research and development for their pipeline? If we're just going to allow generics to come immediately out and take their business without spending that money. Okay, that's why we have a patent system. That's why we keep generics out of the market for so long, because we have to incentivize these drug companies to actually spend the research and development, spend the time, and develop these drugs. So, we have seen that there is February of last year was when the FDA ruled that there was no longer a shortage, i.e., no longer a need for these compounds, and no longer a reason why these compounds should be sold in the open market. We can see that the FDA is slowly restricting their use. April of this year, reducing it to just a very few circumstances when these compounds could be offered. So again, here I think Novo is your best bet here, down from its $140 price peak last year. It has been the hardest hit by these compounds. It would have the most to benefit from the pill form. Now, if we go here to the analysis for Novo Nordisk, ticker NVO, again, the analyst expectations, we can see that it is still expected to grow grow revenue by 10% this year, another 10% next year, but 10% this year to 320 billion. Now that is in Danish krona. Okay, so that's actually only about $50 billion US dollars there. But I think that could be upgraded on either one of these two catalysts, right? If we do see some movement in further restrictions to compounds, basically the FDA coming to the platforms themselves, like Hims and Hers, saying, hey, you need to stop making these compounds available. I think that is very likely. Obviously, the pharmaceutical industry has a huge lobby there in Washington. They've got a billions of dollars of bet or upside to keeping generics out of the market for as long as possible, and they're going to be hitting the FDA very strongly here on further restrictions to these compounds. So I do believe that with the compound restrictions, with the pill form coming out, as well as just with more indications being approved for Wegovy, like we saw with that fatty liver disease, I believe this is going to be upgraded. And if we take that and we look at the valuation for Novo Nordisk, I think you'll see the shares are trading very attractively right now at 4.7 times sales. But if we take that times the times expectations, so right now it is trading for $226 billion market cap divided by $50 billion in expected sales. That's about 4.5 times this year's expected sales. If we do see an upgrade though to 55 billion, that is going to increase the growth on these sales. It's going to bring those growth investors back. I think you're going to see a re-rating in this. So 226 divided by 55, it'd be basically 4.1 times, where you can see in the past here when these weight loss drugs did come out and they were trading at those highs, really bringing investors into these stocks. You had shares of Novo Nordisk trading at 7, 10, 13, even 18 times price to sales. Now, I don't think it gets back to there, but even a realistic 7 times price to sales on this, we take 7 times $55 billion in sales, we get a $385 billion market cap. So what would that mean for the shares? $385 billion from $226 billion right now. So divided by $226 billion, that would be a 70% return. Okay, 70% return on the shares, $54 price right now. That'd be about a $90 per share price target on shares of Novo Nordisk. I do think it gets there. I think you get those two catalysts. One, the greater restrictions on compounds. The two, the pill form being approved by the FDA. I think you get an upgrade of that sales target to 55 billion. That brings in a lot of the growth investors back. They start looking at this stock as a rebound stock, and you get that re-rating to 7 times price to sales. Now, I do think shares of Hims and Hers eventually rebounds on some of that news, but first it's likely to see a sell-off on the crackdown to compounds. Okay, we already saw back in February of last year, when the FDA did say that the shortage was no longer a problem in those weight loss drugs, sold off 24% because Hims and Hers makes a lot of money off those compounds being available on its platform. Okay, they are cheaper than the injections. They are in massive quantities, so it will likely sell off when the crackdown comes on those. But it could bring back an NVO deal. Okay, so Novo Nordisk makes a lot of money by partnering with platforms, especially Hims and Hers that has a huge customer base. Will make a lot of money from bringing that partnership deal back. And I think once Hims and Hers finally stops selling these compounds or stops making these compounds available on its platform, that brings Novo Nordisk back in for this deal and the price jumps again. But I think you have to wait for that to happen, wait for the crackdown on compounds to happen before you get into Hims and Hers. Now, looking at the analysis on Hims and Hers, we can see that it is still expected to grow revenue by 58% this year. So it is still a growth stock, folks. It is still doing very well, expected 19, 20% next year. This year to $2.3 billion. So it is still growing, and here at a price of 5.6 times. It is not cheap though, okay, but with that growth, that is fair for that kind of growth. I mean, a company growing its sales by 58% a year. In fact, if we take this market cap, $10.4 billion, divided by the 2.3 billion in sales expected this year, it's a 4.5 times price to sales. Okay, you can see that is well under the 6.7 times price to sales it traded at last year. Not necessarily cheap. It is a good growth stock, and I do think it comes back up, but only after it's sold off again once the crackdown on those compounds comes. Looking at shares of Eli Lilly here, also within that weight loss drugs idea, also down 26% from its highs on that compounding problem, but the upside in pills is there, as well as that crackdown, that other catalyst. It is safer than NVO. I think Eli Lilly always has a stronger pipeline of new drugs, and It also has U.S. manufacturing, which is going to be important when the president does start leaning into his pharmaceuticals tariffs that he's talking about. It's going to happen over many years, and it's going to be a step rate in the tariff, but it's going to benefit companies that already have that U.S. manufacturing in place, which obviously Eli Lilly has much better. But this does not have the upside potential of shares of Novo Nordisk. Okay, it isn't down from that huge peak. It isn't down almost 60% from the peak like Novo Nordisk, only down 26%. But I do believe there are some catalysts here for Eli Lilly, but not quite as much as Novo Nordisk. I'm going to show you how to find that next 158% return in a rare earth stocks next, but an announcement I made in our Monday update. I'm going to be speaking at the Blossom Investor Tour in New York and Chicago in October and hosting our very first Let's Talk Money meetups. I'm going to have news on where that is over the next few weeks, but in the meantime, join me on the Blossom Investing app free with the invite link I'll leave in the description. I've been using the Blossom app for a couple of years now. I love it for getting ideas and sharing my own portfolio. Now, this isn't just another investing app, though. You can connect your brokerage accounts, or just put in your stocks manually to track all of them in one place. You're going to see portfolio percentages. You're going to see average dividend yield across your entire group. You'll also be able to join more than 400,000 investors in the social feed, see what everybody else is talking about, see what everybody else is buying. So I've shared my portfolio there on the app. You can see all the stocks in my portfolio. It's totally free to download. So make sure you look for that special invite link in the description below. Scan the QR code here and look for that news about that investor meetup. Second idea here could be even bigger and comes as the Department of Defense as an historic investment in a rare earth miner, MP Materials, back in July. Okay, it signed a 10-year agreement for a price floor of $110 per kilogram of its products there. So basically said, anything you're not able to sell at 110, we'll buy it at that price. So basically a price floor on all the company's product there, all its mined assets, with $150 million loan to build out the company's 10X facility and $400 million in investment in preferred stock of the company. So the government of the United States is investing directly in MP Materials at a $30 share price. And you can see what that announcement did to the shares. The announcement sent the shares up 50%. I think something had already leaked out here because you do see that announcement here at the beginning of July. It was right about $30 per share. It had jumped up already from May here, about $19, $20 a share. So it was already up from $20 a share up to 30, up 50% already. That announcement, that official announcement, took it up to $50, up another 50%, up another 50%. And then it's gone up higher since then, 380% over the last year. It's up 275% since May. So since that deal started leaking out on this company. And that deal comes off of a trend that we've seen over the last year, China choking off the supply of these critical materials, these rare earth elements from Western defense companies, from other countries, and really controlling that supply. Okay, these rare earth elements, obviously in very, very rare quantities across the globe, very hard to find and mine out of the ground. That's why a lot of companies just haven't gotten into them, because they're so hard to find, so hard to mine, that it's very expensive to find these and to mine that production. China has been very aggressive over the last decade, though, finding the countries where these rare earth elements are, investing in that production, and now holds more than 90% of the world's supply. Okay, and it is using that as a bargaining chip. It is using that in an advantage. These rare earth elements going into a lot of products, specifically defense products. We've got drones, night vision devices, missile targeting systems that all need these rare earth elements to be produced. So you've got MP Materials, ticker MP. They're getting that deal as these rare earth elements become really a matter of national security. But it's not going to stop there. That's not the only company that is going to mine these. It's not the only company that's going to benefit. Now, whenever I get a new idea like this and I want to find companies involved in that, I'll usually look for an ETF that holds those stocks. Start my research with that. Makes it a hell of a lot easier than searching around the web for some news or some listicles on what stocks are involved within that theme. Here we've got the VanEck Rare Earth and Strategic Metals ETF. Okay, so I'm going to start here. That doesn't necessarily mean you rush out to buy this ETF, because it's not necessarily going to hold a lot of those RE companies. It also says this Strategic Materials. There's going to be a lot of battery makers and a lot of other things that aren't necessarily in this theme and not necessarily going to get that 158% stock bump from a government deal. But on any ETF, if we scroll down and we look for either portfolio or holdings somewhere in the menu here, or if we just scroll down, then we will find it here in the here we can see total holdings. So you can basically mine the mine an ETF's holdings and see what are the best stocks within that. Okay, and these are all always set up as a percentage of net assets. So you've got an ETF with a very specific theme. Okay, investing in rare earth, strategic metal miners, companies like that, and you can see where they're putting most of their money. Okay, you can see the biggest players, the really the players with the most focused investments, most focused assets in that theme. And here you've got Linus Rare Earths. We're going to be talking about that. You got Albemarle, which isn't necessarily a rare earth company. It's more in that lithium for batteries. It is, it is a stock to look at with the shares down. You got SQM, which is also again in that lithium. You got a lot of these, not necessarily those rare earths, but so you need to do a little bit more research here. Now, one important note here: it does give you access to shares that you might not otherwise get access to. Okay, you'll scroll down here and you'll see a lot of these the AU, that's Australian companies, a lot of the Chinese companies, Hong Kong. So we want to look at one of the benefits here of buying an ETF is also going to be that exposure to companies where you might not otherwise have exposure from. If you're a U.S. investor, you might not be able to get those Aussie company shares on the Australian markets. So it does have, we do see it has 20% of its assets in Australian shares. It does have 24% in U.S. companies, really across the globe here. Now, one problem with this REMX, the rare earth ETF, is that it does hold 32% of its assets in Chinese companies. Okay, that's a little bit troubling if you're worried about these geopolitics here, but it is still a good place to start your research. Okay, one, if you want that broad access across these companies, across the globe, then yeah, you can go with the REMX. What I'm suggesting though is you go in here and you start your research with the companies that it's holding. One of those companies, like we saw in the ETF there, the largest holding actually at about 8% of that market cap. Here we see Linus Rare Earth Limited, that is the largest non-China rare earth producer. It's building a US processing in Texas. What you want to do, it's already up 146% this year, so or over the last year. And you see a lot of that is after that news of the July announcement by the Department of Defense investing in MP Materials. You can see here its growth from or its history actually started out as a gold company, so has since transitioned into into rare earths. It's got a lot of international exposure to these for shipments of rare earths products there from its Malaysia mining there in 2013, has grown into, again, the largest non-China rare earth producer there, and is building exposure into the U.S. through its U.S. processing in Texas. We also see Energy Fuels, ticker UUUU. There, it's a uranium focused, so it's not specifically on rare earths, but it is expanding its production into rare earth. We've also seen very strong support for uranium and for nuclear energy, and the uranium stocks, uranium miners that obviously produce the product to go into that nuclear energy production. So this would also be another one you would not want to look at. And then this rare earth elements resources here, REEMF. It is developing a Bear Lodge project in Wyoming with the DOE support, with Department of Energy support there, but it is pre-revenue. If you go to the Rare Earth Elements Investor Relations page, you can find this investor presentation on the project, kind of look through the project at Bear Lodge Critical Rare Earth Project for mining and processing. It does also have an open pit mine at Bull Hill there that the Black Hills National Forest supported facilities on private land, and again, support by the Department of Energy. Now, one thing you do have to understand about trading in these or buying these OTC stocks, okay, over-the-counter stocks, they're not traded on the NASDAQ, on the NYSE market exchanges. Instead, they're traded through these other markets. There is not the same level of regulatory oversight on these companies. They don't necessarily have to put in audited financial statements, so financial statements that are audited by a public accounting firm. They have other things they don't have to meet up with as far as the regulations of stocks that go on the NYSE or the NASDAQ. Okay, so there's very much more risk, a lot more fraud in those OTC stocks, in those OTC markets, because they're just not regulated. You just don't have the oversight on those companies. So you really have to dig into the research on these companies to make sure that they're doing what they actually need to be doing. Join me on the Blossom Investing app free with the invite link below, and don't miss that upcoming news on our New York and Chicago meetups. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.